Good day, my name is Andrew Milligan. I'm Head of Global Strategy here at Standard Life Investments. I hope that you are enjoying a well-earned break. Indeed, it is a glorious day here in Edinburgh. The summer months, though, can often be rather peculiar ones for financial markets. When I look at the markets today, I see the impact of many people on holiday. Rather a small number of trades, for example, limited amounts of buying and selling. The levels of liquidity are rather low. However, markets never sleep, of course, even during the summer. We're now 1/3 of the way through the US earnings season. Actually, it's quite good news. The end of July, early August would see the European season in full swing, and the early pre-announcements there are not bad either. So what's the good news on earnings? Well, after the 150 or so companies that have reported out of the S&P 500, it looks like US earnings are growing about 6, 7, 8% per annum, a little ahead of the expectations that analysts came out with at the start of the year. And as usual, those companies that are coming out with good news are seeing their share prices perform accordingly. The Dow Jones, for example, the S&P 500, trying to break through to new highs yet again. Now, we need good news over the summer months as there are many risks out there. The newspapers are full of coverage on a whole series of issues. The very sad news in the Ukraine, for example, whether the civil war there somehow disrupts European gas supplies, events in the Middle East which could impact on oil prices, and then, of course, the banking issues in Portugal and what this might mean for the future of the European Monetary Union as we approach some very important stress tests for the whole of the financial services sector across the Eurozone. And then, of course, over and above this, we still need to keep a close eye on some medium-term issues, the deflation risks in Europe, the debt deleveraging problems facing China. Putting all of that to one side, we're still cautiously optimistic. And for those who have not yet seen the weekly economic briefing or the global outlook, I do commend them to you, available on the website, giving more information about our economic views, our market views, our fund managers' views. In essence, we're thinking that the global economy is still pulling ahead, despite the risks and uncertainty affecting some investors I mentioned earlier. The Bank of England and the Federal Reserve do look like they're going to be tightening policy in one form or another during the course of the coming year. Conversely, the European Central Bank, the Bank of Japan, the People's Bank of China are all very supportive, adding liquidity to financial markets. By and large, therefore, we still think we should keep moderate levels of risk on in portfolios. In general terms, we're slightly overweight equities and indeed increasingly confident about the outlook for commercial property, not just in the UK, but in a number of other countries as well. Fixed income is certainly being supported by regulatory demand at this moment in time. Government bond yields are kept well low by those actions by the central banks I talked about earlier. But for any medium-term investor, these still look too expensive. As long as we're confident about the earnings, as long as we're confident about the economic growth continuing to pick up, then I think some of those risks that I talked about need not do more than cause some short-term volatility during these quiet summer months. Thank you very much indeed for listening.